Hello and welcome to Moving Iron Podcast Markets with Chip Nellinger. This edition of the Moving Iron Podcast is brought to you by DawsonTire, your premier ag tire and wheel provider in North America, helping people grow. TractorZoom, delivering insights, and DryShod Boots, the official work boot of the Moving Iron Podcast. Well, Chip, there is no lack of things to do right now to talk about, right? I mean, you got
That's
this,
for sure.
You got this massive flooding in China where you've got an amazing opportunity to see the world's largest hydraulically powered dam is on the verge of failing. You've got this Pro Farmer Tour that just took place here, and it actually shot a giant hole in the bucket of the USDA and FC Stone as far as what they were seeing as far as overall bushels to the acre coming in. So I don't even know where to start. Let's just start with what we see as far as acres, the crop report and acres coming up here. So September 11th, right? Is that
11th? Yep.
Okay. September 11th is when the USD comes out with their big crop report, crop progress report, acreage report, those kind of things all start coming out then. The Pro Farmer went out and did their tour, and actually their tour kind of coincided with the big inland hurricane that went through Iowa there, but they were kind of pegging that overall corn acreage at right around what 177, 178, something like that.
Yeah.
And that was down from the 183, right? That FC Stone had come out, and then also USD had kind of been pegging it at that 181, 182 range all year long. So if you start taking a look at what you see as going on with crops right now, and that those total average acres estimates that they're seeing out there, we are off 3 to 5, maybe even up to 6 bushels per acre, depending on what you're looking at and how those things roll. So, what's your thoughts on that? And then, do you feel like that's a legitimate number?
Well, I do, and a couple things. Let me just share this, and we'll take a quick look. Right, this is right off the Pro Farmer website. So they came in at 177.5 on corn. That was well under the USDA at a little over 181, and FC Stone you mentioned was way up there, just a massive number. They put the range 175.7 to 179.3. They always do that based on the end of the growing season weather, and that's really what's driving things in here. On the bean side, 52.5. So they were down a little more than a half a bushel on beans. So not as much as a drop on the bean yields as they were on the corn. They found a lot of things on corn, a lot of variability, some stand issues in areas. Obviously, Iowa is going to be the big question mark. If I scroll down here, well, one thing to point out is that they cut 525,000 acres total from harvested corn acres, 300,000 of that coming from Iowa because of the windstorm. Now, the USDA, to add another interesting twist to this thing on September 11th, is going to resurvey farmers in Iowa as to what their acreage is, depending on how much wind damage they had. And it's all over the board, from literally, zeros disking corn under to no, it's laid over, but some of it's still harvestable, and everywhere in between. And so that's going to be the question. That's what the corn market's been struggling with, is how many acres were affected from the wind damage in Iowa? What's this late season dryness going to do? And I'm going to drag something else into it here. This really, at the heart of it, is what's driving us. This is the past 30-day precip. And you can see in these areas, basically the upper 2/3 of Iowa, the upper third to arguably half of Illinois, and a big chunk of the northern half of Indiana have only had anywhere from an inch to a little over 2 inches of rain for the past 30 days. It's been extremely hot in this area. Just here locally, we've had 95-degree temperatures up until today for the past 5 days, and no rain to speak of for, 3 weeks. And so that's what we're dealing with here, is kind of a quote unquote flash drought. And this area covers, obviously that's drawn in blue here on this map, covers a big chunk of high yielding corn area. And so that's what the market's grappling with. And I think this September crop report is really going to be important because number one, it's the first field survey report that we're going to see. They used to do the first field surveys in August. They cut back on for budgetary reasons and other issues. They don't do that till September now. They take those field surveys actually, within the last several days to next first 2 or 3 days of September. So they're very important because they're taking those surveys right now in the heart of this dryness and heat. And so the market's going to have this massive variance of opinions because pro farmers out there at 177.5, and we just don't know. Some of these field reports from farmers that are out in their fields in these areas, especially Illinois and Indiana, not so much Iowa, because Iowa is kind of its own anomaly this year because it was much drier. These parts of the upper half of Illinois and parts of Indiana have had some okay rains through June and July. It just shut off in August. And some of these areas were really early planted. So some farmers are saying, yeah, I'm out walking fields, and I think that, fingers crossed, we had it planted early enough that we're going to get past a lot of damage from this late season heat and dryness. Obviously, the later planted it is, the more it's going to affect it. And then this area out here in Iowa is, kind of right here in the central part of Iowa is where the big wind damage came into play. So it doesn't matter really whether they get, that's affected from the wind, but certainly here in the western half of Iowa, it's been very hot and dry. So wide variance of opinions. We're going to really put these hybrids to a test this year as far as what can they do, and what does late season heat and dryness mean to our crops? How much are we going to take off the top from, reducing test weight and grain fill capacity here in August? Because it just literally looks like, although temperatures have finally cooled down here and they're more seasonable, we just have not had any rain. And the hurricane, you can see where the hurricane moved through, right? It comes right up through, Louisiana, Texas, and right up here through the kind of Mississippi and Ohio River Valley area. And they've been well watered. And I guess as dry and hot as we've been in this area, some of these areas through Missouri, Southern Illinois, Southern Indiana, Kentucky, northern part, kind of the Boot Hill, Missouri, Northeast Missouri, Tennessee, or Northeast Arkansas, Tennessee. This area have had some really good rainfall and really good yield potential to help offset some of, maybe not all, but some of what we're going to lose in the I-states in here. So it's really shaping up, Casey, to be anyone's guess on the September report. And then obviously that's the first crack at this from a field survey. Then you're going to have October, and then again in November, and the January crop report. So we've got several months coming up here. The market's going to really digest this, what pro farmers started and saw, but then the crop conditions through heat and dryness in August and the first, several days of September look like it's going to be really hot and continuing dryness. What's that going to do to the top end of bean yields and corn yields? The bean market really probably responding the most to all of this. It's just been a straight up moonshot, because who would have guessed? I mean, some people did, but it was a gamble, and I guess you would have won the gamble that this area of the I-states would be this dry this late in the season. Literally no rain in some areas going on 3+ weeks in a time that it's been very hot and we need the rain. So I feel like I just rambled on a little bit there, Casey, on your question, but this weather map is really what this whole market comes down to. When's it going to rain? There are some few slight chances like midweek, this upcoming week, but it looks like we're going to end the growing season on a really dry note. And that's really what's driving things.
Yeah. All right. So now that we're talking about this, there's a couple catastrophic things that have happened in the Corn Belt. I obviously think the inland hurricane inside of Iowa there that we saw, and then we had a kind of a week worth of a bereavement there to kind of catch our breath, and then Hurricane Laura comes screaming through, made landfall there in Port Charles, Louisiana. Uh, I guess you can six one half dozen another, I think, but the speed of it didn't drop as much rain as I thought, but it did generate a lot more wind. As you look at Arkansas, Mississippi, um, through the path of Hurricane Laura as it made its way into inland there, this week is going to be that true tell of what we saw as far as crop damage goes in the southern Corn Belt. What are your thoughts there, and how do you think that's going to stack up comparatively?
Well, that's a tough call. I mean, I think there probably was some damage in parts of Texas, Louisiana. They had started harvest down there already, so some of that crop was out of the field. They knew it was coming, so they rushed as much as they could to get as much out of the field as they could ahead of that. Probably the most damage is going to be from some of the standing corn in Louisiana. It seems like, as you mentioned, as it moved north up here into this path, like, through the rest of Louisiana and Alabama and Arkansas, it kind of fell apart a little bit. And what I've picked up from guys I've talked to is, yeah, there was some rain in there and maybe a little too much rain for what they wanted this part of the growing season. Some 4-6 inch rains. There wasn't as much wind as it got up into this, Mississippi and Ohio River Valley area. And that doesn't mean that some of these people didn't get some, but as a general consensus, it seems like we missed out on a lot of the wind damage. Some of this harvest down here in the Mississippi, Louisiana area had started already. And so some of that crop's out of the field. And certainly they don't want to, when you have corn ready to harvest, you don't want a hurricane and
Right.
8+ inches of rain on things. But what I've picked up from this hurricane is it wasn't that big of a crop damage issue, maybe with the exception of Louisiana and some of their crop. But some of that was out of the field already because they'd started harvest already.
Yep. Okay, so let's flip down south into Brazil and Argentina, and the growing areas down there, whether it's soybeans or the corn area that they have grown. There's a lot of dryness down there right now. A lot of issues that we see happening where there's not the moisture's just not there that they're looking for. But okay, here we are. We're talking about the pro farmer thing. We're talking about the Iowa deal. We're talking about Hurricane Laura. Now we got this dryness down in South America, and I mean the market's moved. We've seen some rallies. We've seen some moves there, but everything still seems to be hinging on what China's doing. And
yeah,
I mean, so I guess talk about what you see happen in South America, and then kind of how that relates back into what we see happen with China.
Yeah, right now, China's been a big buyer of our U.S. agricultural products as part of the Phase 1 trade deal. Probably the biggest buyer of beans. They've been in, this is off the top of my head, but something like 12 of the last 15 days they've bought U.S. soybeans. They've been a big buyer of corn. They've had a couple big purchases each in the last 2 weeks of U.S. corn. They have been a buyer of U.S. wheat. They're buying sorghum. Obviously, beef and pork they're starting to buy. So as part of I believe you never know the full details, but their actions right now tell you they're worried about feeding people in this river valley area, the Three Gorges Dam that may give way. To the north of that are their main crop areas, and you have seen some dryness in those areas, as well as some insect damage. This locust issue that has been, hurting different parts of the Far East. It appears that they're struggling with that. And so where there's smoke, there's fire. It does look like they have a big appetite and that they continue to buy U.S. products. But as you mentioned, South America's ready. Their currencies, particularly Brazil, are really in the favor of the Brazilian farmer right now. The way that they conduct business and their currency fluctuations are far in favor. They're making like massive profit margins. you know, allegedly they're making up to 3 years of profit margins with this crop they're about to plant. And the last crop that they just, you know, got done harvesting this past winter, and now are in the process of finishing up selling that, they made really good profit margins as well. They are set to increase acreage down there on beans from anywhere from 2 to 4+%. They've had some private estimates already that if the weather is normal, that their soybean crop size in Brazil could be upwards of 133 million metric tons versus a previous record around 121, 122. So massive, massive production increase is in the cards. Now, with all that being said, they haven't planted an acre yet. They've got the whole growing season ahead. And it's a La Nina year. So if you haven't heard about that already, you're going to be ready to throw up by February, because you're going to hear La Nina about 67 trillion times. La Nina is kind of trends them towards hotter, drier conditions. And as you mentioned, it's been very, very dry in Argentina. They've started to get a few rains right now, but the growing season, because of La Nina, could be a little bit on the drier side. I take that with a grain of salt, because if you just, I don't know if you still see my screen, Casey, but the Brazilian growing area really ranges from up here about the Canadian border all the way down here into our central plains, almost as far south as Mexico, and then back up through kind of the eastern corn belt here. It's a massive area compared to our main growing areas. It's hard to get a generalized drought situation because they're so spread out. It almost insulates them a little bit because of how far north to south and east to west that growing area is. It's hard for them to have just a general, everyone's hot and dry, and they're going to plant more acres. So that doesn't mean they can't have a problem. It's just harder to see a big problem there. And maybe Argentina is going to be the hot spot to watch, but certainly they are waiting in the wings to produce a massive crop. And China's, at least so far, said and proven by their actions that they're going to buy from whoever it's cheapest and it makes the most sense to China to buy from. And unfortunately, if there is a big crop down there, that means that's going to be Southern Hemisphere, products and supplies from about, I don't know, the end of, say about the beginning of January through the end of April or May, depending on their crop size. And that could put a crimp in things. But we have front loaded on exports. China's been a massive buyer of new crop supplies, and that's what's driving things in here, in addition to this dryness on this weather chart. And that's really caused a big change in the dynamics of our markets here, especially the bean market recently. Beans are just leading us higher on a straight up moonshot. And that is, it's a pace that probably can't continue, but boy, it's been a big change of ownership and market thoughts in these beans because of this hot, dry weather we've experienced here in the United States.
Okay, so a couple things. So Brazil, Argentina, and the EU have all talked about how they're going to lift tariffs on imports of grain, and that's across the board: corn, soybeans, sorghum, wheat, all that stuff. EU, I understand why they're doing it, because they have their version of the USDA has backed off the crop estimates on corn and wheat both to be somewhere in the neighborhood of about 50% back of what the original projections were due to drought. Brazil sold as much as they could possibly sell to China as fast as they could sell it, so they might have outpaced their ability to make sure that the home front's taken care of. And I think Argentina did the same thing. So as you look at those three kind of monikers out there right now, what's your thoughts on that, and how do you think that's going to play into this week's trade?
That's the chess game, if you want to call it that the world's playing right now. China has such a huge appetite. There's obviously demand in other parts of the world. There's a lot of moving pieces in this thing. So European Union's part of that. The euro currencies had a big rally against the dollar. So the dollar's dropped the most against the euro currency, the least against some of our competitive ag countries like Brazil, like Russia. And unfortunately, Europe is probably the least, the smallest player when it comes to our, major grains, as far as them importing that. And that's, mainly the GMO issue there. So with all that being said, there's some talk that Brazil may import some of they've exported more of their beans at the expense of their internal crush capacity. They may have to import some of our ethanol. There's a lot of moving pieces here geopolitically and, interconnected across the world right now. And that's what is part of the unknown of this. And how's that going to affect our exports? So that's what the market is kind of waiting on and digesting. I think Russia and Ukraine are another part of this. They've been pretty hot and dry. It's probably, nipped their top end yield potential in those areas. And they're a big, competitive force as far as our, especially grain and wheat exports go in the rest of the world. So that's really what's kind of causing some of these big moves and volatility we've seen, led by the bean market, but corn and wheat aren't immune to that either. And it's just a matter of when this shakes out here in the next couple months, what's our crop size? What's the world supply? How much is that going to affect our exports? And how big of a player is China going to continue to be? Because even though where there's smoke, there's fire, and you have to go by what their actions are. Their actions are they are buying new crop grains and proteins in a massive amount, in spite of almost on a daily basis what appears to be the United States and Chinese economic and political relationships getting worse and worse almost on a daily basis. So that almost leads you to believe that they probably do have a problem, whether that's the flooding or a combination of flooding and production problems there, that at least in the short run, they need the grain, but how long are they going to keep taking it, and how big of a crop is South America going to have? Because my opinion is if they can buy it from anywhere else in the world other than the United States, they're going to do it. Right now, they can't because we're the only game in town. South America is about sold out of supplies from their recently harvested new crop. And so China needs it, and we're the only place they can get it. And how long that lasts is going to be a big question.
Yeah, no, that's exactly right. I mean, as you look around right now, I think the biggest reason why this tariff thing is happening right now is because we're the only place on the planet right now you can get a large supply of grains, proteins, those kind of things. I mean, we're really the only game in town when it comes to that. And I think the Chinese know that, and I think everybody else on the planet knows that until something else happens. And this weather thing, like the La Nina thing you're talking about, if that does come to fruition, it's going to be dry. It's going to be hard growing here in the next this next upcoming growing season in some very key growing parts of the world, i.e. Brazil, i.e. Europe, Russia, the whole Black Sea region, India, Argentina, and those areas are all going to be greatly affected by La Nina and how that affects their growing season. And we could be, and not things are going to be that great in the U.S. either, but we're going to be better off than the rest of the world if everything follows like past La Ninas have gone. So there could be some great opportunities here in the next 12 months for the U.S. farmer.
Yeah, I agree. And, the market's forward thinking. It's a futures market. And, let me just pull the bean market up. I think the bean market is a prime example of this. Right now, as we record this case, we're up 14 3/4. I mean, this move here just in the last 2 weeks, we put a low in ahead of the August crop report at 865.25. We're trading 965.25. So we have rallied $1 in 2 weeks straight up. It appears now that the market wants to challenge this gray area up here, these previous highs from you know, a year plus ago. We've been up in this level about 3 times, and essentially that's about 978 to call it 985. Another 20 cents higher than where we're at. Do we push above these previous contract highs and challenge 10 bucks? The weather will tell you that. Crop size will tell you that. But all I can tell you is if you take the last 2 weeks, $1 straight up, and go back to these previous lows about 830, so you're about $1.30 off the lows from mid to late April. The rate of this increase, I don't care what market is, it doesn't last for long. So the market is in the process of digesting the worst possible scenario. And I don't know where that high, I don't know if that's 980. I don't know if it's these overnight highs so far. I don't know if it's 1020, but I'm telling you, this move is probably it. You got a big gap here. It's not going to take long. It's not going to take till February when we see the South American weather situation for the market to digest the most bullish situation. And so you're probably in the, you know, the midst of an opportunity here. Corn and wheat haven't followed as much as beans because some of this dryness has happened, especially that mid-south area. You know, they're about to harvest corn. So heat and dryness, and plus they haven't had the dryness. They've had plenty of rain. And up here in this area, we got it planted early enough that it's probably not doing tremendous amount of damage east of the Mississippi. And that doesn't mean it hasn't taken the top end off, but these beans, they're made in August. We just haven't had a lot of rain. And the jury's still out on that, right? We're going to know a little more on the September 11th crop report. We're going to know even more on the October crop report. But there's one argument out there that, you know, maybe yields will hold up a little bit better because in general, a lot of this was planted early, especially beans. More and more the last 3 or 4 years, people have been planting beans earlier, and that's driven some of our better yields. And it's just an unknown. We haven't faced this very often with this kind of late season drought. It's not like 2012 when it just didn't rain starting in June and never rained again. A lot of these areas have had plenty of rain, and just in the last 4 weeks it shut off. So how bad's it hurting yield is yet to be known. But on this chart on beans, the bean market is telling you we're not going to take a wait and see approach. We're going to assume we are losing yield dramatically, and we're going to work backwards from there. And so my take on this straight up move, $1 in 2 weeks essentially, and maybe there's more to come. Maybe there's another 50 cents in this thing. Maybe we're going to 10 and a quarter. It's going to happen probably sooner rather than later. And they're going to have the most bullish scenario factored in relatively quickly, I think. Possibly this week, because you've got the long weekend. We got Labor Day coming up. No markets is coming Monday. And then on Friday is a September crop report. So I think there's a small possibility you put a high in this week in the bean market. And where is it? I don't know. This thing's moving 15, 20 cents a day. I mean, it could be well north of 10 bucks when it happens, but personally, I'm on the lookout for a potential intermediate term to longer term top sometime this week in the bean market. And, you know, then maybe a long tail into harvest and then wait and see on what the South American production looks like. But the bean market's definitely the leader right now.
Okay. All right. So let's take a look at, if you go back and think about it for a minute, USDA comes out on September, makes an adjustment back from their 181 to 183 range that they've been kicking around here since January or since March, April when they rolled that out. And then you come back into that 176, 177, 178 range in corn, and you start hitting that 50, 52 in beans. And they start making those adjustments September, October, and kind of roll that like they typically would up until January. What's your thoughts on run-ups at that point based on those reductions in yield?
Yeah, so let me share my screen again here.
Okay.
I showed you beans there just a second ago. So this is the corn market. Just as a quick review, my cursor's a little slow here. So here's beans. You can see the ascent that they've gone up. Here's corn. We haven't even yet exceeded the previous highs at 363 from about a month and a half ago.
Right.
And now we're getting close to it. If we do exceed that, there's a lot going on from a technical perspective, kind of in the essentially 380 to low 370 area in that gray box that I just drew, basically 380, if my cursor will cooperate, kind of that gray box right there. 372 to about 380 would be maybe the next target. But you can see the corn market isn't as concerned as the bean market, because a lot of the corn is far enough along that this dryness will take the top end out, but maybe not to the extent of the beans. But that's the unknown that the market's going to try to digest, and typically they do it sooner rather they shoot first, ask questions later, and so I think that's part of what you're building in right now. And some of your question, the answer to your question is going to be what happens on the September crop report. If they come in at 180.5, then the market, especially on corn, has probably overshot it, and they're going to think, well, maybe it's going to be somewhere between 177 and 180, and we've digested the worst of this. If they come in at 175, then the market's going to start thinking, okay, they've got more to cut in October and November and January, and this thing's going to end up, at somewhere way south of 177. So in my opinion, a lot of it depends on what comes out on the September crop report. That's why it's so important. And with this late season heat and dryness, September crop report is always important, but this might be one of the bigger impactful crop reports that we've seen in a long, long time, because they're going to have actual yield data, right? They're going to have weights, they're going to have pod counts, they're going to weigh pods if the bean plant's mature enough in areas. They got a lot of good data on this report, and you can argue it, but it's really going to drive the market. So I think it depends on the size of the change in yield. If it's small changes, market's going to say, okay, we've got this pretty close, and maybe we don't have to go up a lot more. If the changes are bigger decreases than what the market thinks, then they're going to really add to the bullishness, thinking they're just going to keep cutting this thing all the way to January. So it's going to really, September 11th is really going to set the stage for how this market trades through harvest and into early winter, in my opinion.
Yeah, a lot of crazy stuff there, man. I mean, so much is just hinging on little things, just little things taking place. So, man, I got this crazy. So, what's your thoughts on? Now we're talking about the corn market here. Let's talk about oil. Oil, since the COVID-19 kind of everything started reopening and those kind of things, it went from a negative $38 a barrel down up to now we're up to back up in the 40s. I think we're Friday finished up, West Texas Intermediate finished up somewhere in the neighborhood of like 43 and a quarter, if I remember correctly. And I'm just trying to think off the top of my head here, but Brent crude was around 45. So we've gotten back into that 40 to 45 range. We kind of slot back and forth in that range. Never a lot of intraday volatility, but not a bunch of day, outside of that, a weekly volatility. There's not a bunch there. So I guess as you look at the oil market compared to that relationship to ethanol, what's your thoughts there?
Yeah, so I don't know if you can still see my screen here, Casey.
Yep,
this is October crude oil. And you could see we never went negative on the October because there was big carry in the market. So this is just the October contract. That low clear back there was in the low 20s, just called about 23 and change. And we're trading currently about 43.12. if you can see this gray box here,
Yeah.
we've really for about a month just gone sideways. We've slopped around a little bit, but if you compare this to the, you know, some of these range days, just pick this one out. This was a almost a $3 range, low to high. This one was about the same, about 270. Here's one to the downside that was $3.20. These ranges have really narrowed as we're going sideways here. So the two things it's telling you. One, the market's fairly priced right here in the low to mid 40s. We've kind of equalized supply and demand. People are driving more. We're not fully open necessarily, but people are driving more than the middle of COVID. From an ethanol perspective, we continue to run about 10 to 12 million bushels a week below what our average has been. So it has bounced back as driving has increased, but our ethanol usage has not bounced back to 100% yet. You can argue that maybe that's okay, maybe that's close enough because of some of these purchases of China of U.S. corn that our exports have increased to offset that a little bit, and we're going to be okay on the demand side. That's yet to be seen. That'll be played out between now and the January crop report. But from a face value standpoint, ethanol demand is a little bit questionable in my mind because we haven't bounced back fully. Now, the other thing about crude oil, when you see these sideways ranges, you're going to break out of here one way or the other. I don't know which way it'll be. This blue trend line from these two previous lows, this is on July 30th, and this low is on June 15th. This is important. The moving averages are crossed for higher. People are bulled up because, you know, we're at a multi-month high in here. But whatever way you break out of this range, call it 41.33 on the downside and 43.78 on the upside. Whatever way you break out of that's probably going to be the direction of the next big move higher. If it's the upside, it probably could push you to up close to $50. If it's to the downside of this, it means something's going wrong. Maybe the economy's slowing. Maybe the stock market has put a correction in, and maybe you're going to come down here back into the mid 30s. So I wouldn't expect, Casey, when we're talking in December or January, I'd be shocked if we're still in the 43 range. We're probably going to be either closer to 50 or 35 just by the way these markets move. And some of that's going to have to do with how the world economy comes back, as well as how we, I guess, how the spread of COVID happens once the cooler temperatures come and winter comes and the normal flu season starts, which is going to be pretty soon in a lot of areas. That's probably going to drive the next leg of this based on what the expectation of the market is for, I guess, the health of the world economy and how we're going to get through the winter flu and COVID season. That's staring us right in the face here. We're looking down the barrel of that.
Yep, absolutely. Well, good stuff as usual, Chip, man. A lot of great information here. Make sure you check this out on YouTube. Chip and I were live on YouTube with this, so all the charts and stuff he was showed up there. You should see them out there on the YouTube video. Chip, if folks want to reach out to you and get more information about what Blue Reef Agri-Marketing does and how you can help do some just planning of the everyday marketing strategies, what's the best way to do that?
Yeah, best way is just give us a call at the office. We work from home a lot. Sometimes we're in the office, but if you call our office number, it rolls over to our cell phones. We'd be happy to talk to you. That number is 309-550-7213. Kind of treacherous times. No one knows exactly where the market's going. I'll tell you that, Casey, but things have gotten a lot more interesting, and it's more important than ever to have a plan. So feel free to give us a call, and we'd love to chat with you.
Yep, that's a great point, Chip. Make sure you have that plan put in place and that everybody understands what that looks like and how that's supposed to work. So I am Casey Seymour with Moving Iron Podcast. Make sure you check me out. Uh-oh. Hit the wrong button. Hit the wrong button there, Chip. Technology is great when it works. I'm Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram for all the latest news as far as Moving Iron goes. Also check out my website, movingironllc.com, where you can check all the latest news that has to do with Moving Iron Podcast and the Global Ag Network as well. Listen to all the great podcasters out there. The Moving Iron Podcast the Moving Iron Summit got postponed. It was supposed to happen September 1st through the 3rd. They got moved to January 20th through the 22nd. Same place there in Nashville, Tennessee, at the Renaissance Hotel downtown. And I should have more information up there this next couple of days as far as that goes. But with that, I am Casey Seymour with Chip Nellinger. Let's go move some iron, folks. Out.